Okay, so I'm sorry there was a call. So we were discussing this in the mid 1980s. American businesses. I stop sharing. Okay. So here is the preview of the book regarding the chapter on foreign exchange market. Let's start reading this. In the mid 1980s, American businesses became less competitive with their foreign counterparts. Subsequently, in the 1990s and 2000s, their competitiveness increased. So the question is, what happened in the mid 1980s? The American businesses, they were not doing well. Their profitability went down. But in the 1990s and 2000s, it increased. So this preview starts from this point regarding the two phases of American industries. One is the in the mid 1980s, when the American businesses became less competitive, and the other in the 1990s and 2000s, when their competitiveness increased. So then they are asking a question: did this competitiveness occur primarily because American management fell down on the job? Yani, did they was the reason because they were not doing well, their management was not doing well, or some other reason was there? Okay. So here they give the answer: not really. American businesses became less competitive in the 1980s because American dollars became worth more in terms of foreign currencies. The value of dollars increased in the 1980s. So what happened if the value of dollars increased, or if the value of real will increase, or in yen will increase in the market? What happens then? So you have to understand this. How does it affect business? What did you say? There was one request by a student. Ustaz mumkin rakam as-safa or rakam as-safa 344. Talatomia arbo arbain. Right? So we have an answer from Ghaida. The money value fall. Yes, 344. Yes. So American dollars became more valuable than other currencies in the 80s. As a result, the what happened? The American goods, making American goods became more expensive. So it's obvious that if your dollar or real is more valuable, it's increasing in value. So when you give real to someone, you are actually, compared to last year, if the value is high, what will happen? The production cost will increase because the value of real is increasing. But for the same real, if the value is less compared to the dollar or compared to any other currency, the production cost will go down. So here, instead of going into the details right now, let's understand the implication of foreign exchange. Why is it very important to understand the foreign exchange market? How does it operate? So we are starting with the value of currency first. So American dollars increased in 80s. The American goods production became expensive. So, when your own company's goods will become expensive, what will happen? Other countries' products, and if it is an open market, if the market is open, we call it free market today, the global market. At that time in the 80s, it was not so, but still it was, America was the one of the first countries, those the European and the Western countries were actually the starting points of globalization. So, they were inviting foreign companies to operate, so that there is competition in the market, you can sell the products at cheap price or greater quality. So, when the American goods became more expensive relative to foreign goods, what will happen? The local companies will suffer. There will be job losses in the local companies. I will take a break for a minute. Azan is going to, after the Azan is over, we will start. You can read from the first to the last. All right. So, we were discussing, we have something from Najla. When the value of currency will increase, so the economic inflation. Yes, of course, the value of currency will increase, so the value of currency will increase. Let us look at here first. So, what happens when the American business, is it recording? Yeah, okay. When the American business got less competitive because of the increasing American dollar, the American dollar became more expensive. As a result, what happened? As a result, the local companies, the American companies became more expensive relative to foreign goods. So, the companies like Toyota and the Japanese car makers, they got the maximum chance to make their market in the North American, in the European and the American market, because they came up with a lot of new type of technologies. Yes, you are right, Najla is right, the production cost increased because the local labor is costly, the dollar value has gone up. So, if you pay $1, you are actually paying its relative to other currencies. So, when the value of currency has gone up, you are paying more for the same job. So, the Japanese companies, foreign companies, Chinese goods in the 90s, they started entering the markets and started selling for very cheap. So, these products, the Japanese companies and all, they gave a run to the local companies. As a result, there was a problem for the American local businesses, and that was a problem across. So, instead of if we just say, instead of just saying American goods, if we replace this with any currency. So, when a currency becomes more valuable, the production in the country will become more costly. So, if foreign companies are there, they will start making more money, they will become more competitive in the market. In the 90s and 2000s, the value of US dollar had fallen appreciably. Now, these are questions for you, because everything we cannot discuss. There are many questions you can research yourself. Why did the American value increase in 80s? Why did it go down in 90s? These are questions from international business and economics you can research on. Okay, so we understood how does foreign exchange or the currency rates affect businesses, especially when we are dealing with a global world where other countries can participate in your own market. So, there, and you know that this is a very, you know that this is such a easy market these days, right from 90s. It has become very easy to participate in any other country. You can go and sell Pepsi, McDonald's, similarly the Chinese products, they are easily selling anywhere in the world. We can find Japanese cars everywhere, Japanese electronic products. So, this means that the value of currencies have become very important. So, the price of one currency in terms of another is called exchange rate. So, this is one very important definition we have to remember. Okay, the price of one currency. So, we can say that in case of foreign exchange, the currency becomes a product, and the currency is always relative. Yesterday, you know, when I was taking the class, I have recorded that lecture also. So, maybe I will share that one. Some of them I asked for the Arabic translation of relative. I got several words. So, one of the words was nispatan, meaning it is relative to another currency. That is how the market operates these days. It is always relative to the other. Dollar has to be valued in terms of other currencies, and that determines, yeah, nisba, you are right. Okay, so let us now, this is the introduction to the foreign exchange. It is different currencies fighting with each other or competing with each other. How do they compete? They compete mainly for us, you know, we are from business. So, for us, the fighting or the competition is on the basis of sales. If I am going to sell in your country, if my currency is cheaper, I will sell cheaper products in your country, and those customers will have an option to buy cheap products. So, this will pose a burden for the local companies. Similarly, the sale and purchase of the currencies or the transaction that is taking place in the world of different currencies decide what will be the rate of the currency in the market. So, that is an introduction of how currencies affect. Now, let us look at this picture, have a look at this picture. Why are we interested in this market? There were some other markets like futures to be, or derivatives market to be studied, but we are stopping at foreign exchange market. This will be the last chapter we will do. Look at this picture. I was just looking for some data on how the foreign exchange market has increased in size. First of all, when we say market, after the understanding of the impact of currency on the local business that we saw in the preview of the book. Now, let us see the market. What is this market? In this market, selling and buying of currencies take place. So, there is a market like the stock market, the bond market, the money market. We today have a market where we can go sell and buy currencies, any currency in that market. Why does it sell? Because this is also a means of, this is a sort of an investment. It is a very quick type of an investment. Why? Because every day the rate is changing, like the stock market, the rate of value, the value of currencies are changing, and if the value of currency increases and I sell, I make some profit, and if the currency value is going down, I can buy that product, buy that currency. So, that is how the trading goes on. Now, look at this picture. First of all, pay attention to the source. This is from Bank for International Settlements. This is a very important body which is in Switzerland, and we studied this in banking also, which is very important for prescribing the rules, regulations. There is a question, in which country this are you talking about the foreign exchange size, average daily currency trading volumes? This is in the general foreign exchange market. Okay, and if you want to look at the source, here is the source. So, you can go to the website and find out. So, this figure, this is general foreign exchange trading across the world. This figure has been given by Bank for International Settlements, and it shows what is the level of transaction every day, daily transaction of currency. Look, in 2007, in 2007, the transaction size was about $3 trillion, daily transaction across the world. In 2010, it increased to 4. In 2013, it again increased to about $5 trillion. In 2016, there was a drop. So, it is now again up to you to decide to find out the reason. We cannot do everything. Why did it fall from 2013 to 16, these 3 years period? What was the reason? Was there anything special that resulted in the downfall of the currency trading during these 3 years? And between 16 and 19, what happened? You see, the trading has gone up till about $6.6 trillion as on April 2019. But again, in these times, when we are passing through a very special time, if you look at the currency values, the currency trading volumes, what will you see? It is expected that it must have gone down too much, So, it is up to you to find out how this corona has impacted the foreign exchange trading, and you can see the impact, and that is short term impact, and you can also read the analysis of how it is going to impact the in long term, what will happen in 2021 or 2022. There is no doubt that there will be, because IMF has already declared that there is going to be a recession. So, that means all the trading in stock market, in Forex, they will go down. So, in this also go and read some analysis of how it is going to take shape, how much will be the, and what does it mean? The investors will lose money. Those people who have invested in the foreign exchange, they have purchased currencies or invested in foreign exchange, they will be losing money. In fact, in every sector they are losing money, the investors, because this is a bad time. Stock market, they are losing money. Now, let us read some more contents from the book, and then we will look at the notes. So, you got the idea, the size of the market is huge. Even the foreign exchange transactions are more than the stock market. So, foreign exchange market is the biggest market, investment market in the world. Now, foreign exchange market, let us have some discussion from the book, and then we will see the notes, because it is important to have go through the book also. So, here you can see on page number 345, there is a general description on foreign exchange, that most of the currencies of the world have their own currencies. Now, comes a question for you, when did this system of currency, I am not going to answer this, you will answer yourself. This is not important for us, because that you have studied in international business or marketing. When did the system of currency started, this system of currency? In brief, if we would summarize, most of the events in the market took place after the World War II, and especially after the formation of United Nations in 1945. After that, the world gradually tried to reorganize itself, and it was from 1945 up till 1990, for about 45 years. It has been a very good time for technology, for market, everything is peaceful, it's growing. And after 1990 to 20 till now, we are witnessing a very fast growth, but there has been certain different changes in the world, but this period is very peaceful. And in this period from 1945 to some time, there was a system of gold. The currencies were valued against gold. After 1970s, in 1970 sometime, you can search for exact dates, there was introduction of, there is something, okay, very good. This website explains how coronavirus affect the FX frenzy, but you can read it, and on the WhatsApp group you can share your summary of this. Okay, very good. So one phase was that first of all the currencies were introduced. In banking we studied why the currencies were introduced, why money was introduced, the concept of money, and then the paper note was introduced. After the paper note was introduced, the question was how to value this paper note, like real or dollar or yen. If I want to change real with yen, how much should I pay? That was the question. So they found out one answer, to peg it against gold. So the gold reserve that a country has was the basis for this calculation. But in 1970, approximately, I don't exactly remember the date, you can search for it and share on the group. In 1970s, they came up with an agreement called Bretton Woods, which led to the formation of World Bank. It was earlier called Instruction Bank for Reconstruction and Development, IBRD, but later converted to World Bank. So what happened? They then shifted from gold to a basket of currency. So they said no, not gold, but let's fix the value of foreign currencies relative to some important currencies. Obviously, these important currencies would be the top or the superpowers, the G7 or the G3 or the G8 or G20. They will fix the values of the currencies. It kept on going on. This is a something historical, so you can read more how the foreign currencies system has changed so far. So every currency, a country has its own currency, and they value it on the basis today on the basis of the market. The market determines what will be the size. So some of the famous currencies are dollar, euro, real, yuan, etc. The trading of currencies and bank deposits denominated in particular countries take place in foreign exchange market. So what do we sell and buy in the foreign exchange? First of all, this trading is done mainly by the banks. The banks are mainly involved in buying and selling of foreign currencies. So what we do, we put our money in the banks, and money is changed into another currency by the banks. The people who are involved in foreign exchange market, who are dealing, are called dealers, foreign exchange dealers. Some of the major players in foreign exchange are some of the famous names like Thomas Cook. Here I don't, you can go and search for Al-Amudi. Al-Amudi was a very big foreign currency player in Saudi. They were, you can go and search if they are still there, they are still working. So, and who are the main players in the foreign exchange? Not the, except the, apart from the banks. All the banks are dealing with foreign currency. But apart from the banks, there are some special institutions whose job is to buy and sell currencies. So one of the major players here in the world, Thomas Cook is a major player, Thomas Cook. they used to have their own, and Thomas Cook is not just into foreign exchange, they are a big group. They used to arrange tours, travels, foreign currency exchange, all were their business. So, the trading of currencies and bank deposits denominated in particular currencies take place in the foreign exchange market. Trading of currencies and bank deposits denominated in particular currencies. So, a bank will sell its dollar deposit into real, or real deposit will be converted into dollar, and this is a very common practice. Transactions conducted in the foreign exchange market determine the rates. So, the buying and selling of the different currencies will determine the rate or the price of each currency, and this keeps on going every day. Now, let us just have one more point and then we will switch to the notes. This one. What are foreign exchange rates? So, how do we say foreign exchange rates? First of all, it is very simple. It is the price of the currency today what we have to pay. So, if you want to buy a dollar today, how much real should we pay? 3.75. It is fixed. It has been an agreement and it will remain fixed. But if I want to buy a yen, then you will have to check on the exchange rate bulletin today. You can check on any of the bank's website, on any of the online websites are there, portals are there, who describe or who show you the rate of exchanges on daily basis. So, if I want to change real with yen, I will have to pay the value of yen relative to real today. Okay. So, that is how the change will take place. So, I will see what is the value of a yen compared to real, and then pay that much real to yen and take yen. This is the way we do the transaction in the foreign exchange. Now, two types of transactions are there. First is, there is something from Ream, and we convert it. Yes, we convert the look at the price of the currency today, and if I want to buy a particular currency, I will see, for example, 1 lira. Let's look at it practically. Let's look at it practically. Suppose we'll see currency rates today. So, Saudi Riyal exchange rates today. So, here is a body website from UK, exchange rates. Now, look at here, Australian dollars, Saudi Riyal. So, this is conversion. So, if I want to convert Australian dollar, if I want to buy, if I want to convert the Saudi Riyal exchange rates, if I want to buy a dollar, how much I have to pay? If I want to buy a Great British pound, how much I have to pay? How much will I have to pay for the real? Similarly, every day this rate will keep on changing. See, this is the updated figure as on 6/4/20. Now, let us complete that discussion and we will go to the notes. There we will see how the rates are read. So, there are two types of transactions in the foreign exchange. One is called the spot. Spot transactions, what happens here, like in the stock market or in the financial markets, we have studied cash and spot and future, cash and futures. So, what happens here, if I want to buy real and give dollar, it will be done immediately within 2 days. So, you go to a foreign exchange converter, they will change it live, but that foreign exchange dealer will go to the bank, and it is a 2-day market, like cash. Yes, like cash, as we do in the cash market. But there is also called a forward transaction. In the forward transaction, the exchange of bank deposits at a specified future date So, the rate will be fixed today for the for 2 years later or 1 year later or 6 months later today, and that will be a sort of a gambling, that sort of a prediction, and based on that prediction they decide that we are going to fix the rate of dollar or such sort of a transaction where the exchange is determined at a future date. It is called future or forward transaction. So, two types of transactions take place in foreign exchange. Let us come to the notes. We will quickly go through the notes, and there are some questions which you will submit as assignment in group assignment. These are the questions which I think I have already uploaded in the group. So, you will solve them. These are based on 2 chapters, that is insurance and Forex. You will solve them in group basis and then submit it. And on the when you submit it, then we can personally on each group assignment we can have the discussion on the blackboard. Okay, so let us come to the points on foreign exchange. First of all, the foreign exchange market is a network of systems and mechanisms through which currencies are traded. Through which, yes, this like you are right. One is cash market, the other is like future market. Yes. So, it is a network of systems and mechanisms. Now, is there any centralized body in the foreign exchange like stock market? No, there is no centralized body like the SEC or the CMA. It is normally done by something called the over the counter market. So, the rate is determined, so the OTC market means that the system is not controlled by anybody. It is a free market. The trading is going on daily basis, and it is not controlled by any central body. So, it is an OTC market, over the counter market. So, the foreign exchange market provides, first of all, this market provides physical and institutional structure. I read before the currency market larger yeah, you are right, very true. That is what we just discussed. Currency market, foreign exchange market is much larger than the stock market. Every day that we just saw in 2019, April 2019, the transaction was till to $6.6 trillion was the market size. So, there are physical and institutional structure, and what do they do? They will provide the support for selling and buying. So, everything is electronically done today. We can buy and sell the currencies electronically. The money will, so if I want to buy from the market from electronic exchange, we can do it from there. The money will be credited to us in the dollar form in our, but there has to be a special type of an account for keeping foreign currencies. The foreign currencies cannot be kept in the normal savings account that we have in the banks. Okay, like you have a savings account or a current account with Al Rajhi Bank, that is for local currency, for real. But if you would like to keep an account for keeping foreign currencies, there is a special type of an account for that also. All right. So, if I am an investor, I want to buy foreign currencies, I can have a foreign currency account and keep them. When I wish to sell, I can sell. When I wish to buy, I can buy. But as at the institutional level, when the banks are doing, they are dealing with it in a more institutionalized manner, and there is a special type of an account which they keep with each other in different currencies, which is called Nostro and Vostro account. We don't want to get into those details. We will just try to understand in a simple form. So, first of all, there is a physical and institutional structure in which the money of one country is exchanged for another. Rate of exchange between currencies. Who determines This is determined in the foreign exchange market between the person. Please switch off the mic. Somebody is talking. The foreign exchange market, there are buyers and sellers. One is bidding, the other is asking. So, one is bidding, the person who is trying to buy bids, and the person who wants to sell will ask for the price. This is the technical name for buying and selling. And with this, every day, this is how the rate of different currencies are fixed, and also on the basis of the trading that is taking place. It is the where foreign exchange transactions are physically completed. Foreign exchange market, or the market where these transactions are physically completed. Okay, so what are the components of the foreign exchange market? One is banks deal with each other, or wholesale market. There are institutional players who deal with each other, and the size of the transaction is huge. It is in million US dollars or more or equivalent. But on a smaller level, individuals like tourists and small investors, they also participate with smaller amounts in the foreign exchange, but they do it through them, through their brokers or the foreign exchange service providers or the banks. Now, foreign exchange means what? It means the money of a foreign currency, foreign country. We'll go quickly. You will, when you read all the points, you will understand, and when you submit the assignment, I'll explain there also. So every point is there. I just roughly simplified the major points. Now let's come to this important body called SWIFT. There is companies like Visa or Master. There is a body called SWIFT, which is Society for Worldwide Interbank Financial Telecommunications. SWIFT. Someone who's somebody's mic is on. Please switch off your mic. Noise is coming from your side. Whose mic is on? Please switch off your mic. Yeah, this one, this. Marwa, please. Marwa Abu Naji, please switch off your mic. So this body, SWIFT, is like Visa or Master. They are very old body. They are there even when Visa and Master were not there. This is the Society for Worldwide Interbank Financial Telecommunications. Earlier they used to connect through telephone. There was a direct telephone connection between the banks, and these banks became member of this body. After they became member of this body, now the transactions can take place. The transactions can take place between the two banks. The two banks, SWIFT members, can transact with each other. So now the trading, the foreign trade became easy between two countries. So instead of it was very difficult earlier. If I have to buy something from China, how should I buy? How will I make the payment? Now with this new system of SWIFT. You can read more details on when it was formed, why it was formed, what was the reason. But what they do practically is to connect different banks of the world, and they are still there. They are still there, although we have now new technologies to facilitate payment. We have PayPal, we have credit cards, so the retail buyers or retail users can use technologies by using PayPal, credit cards to make the payments in other countries also. If they allow, if the foreign country allows, we can make the payment, we can buy from there also. But earlier, when these were not there, SWIFT used to provide the service to the banks. So the foreign exchange transactions, it was slow because of telephone, but gradually it has improved, it has become very fast. So now even when we want to transfer, it is done even in a day. So in just about a day or two, you can transfer the money from one bank to a bank in other country. It has become very easy. And another important benefit of bank to bank transaction is what? It is very widespread, because like Al Rajhi here, it's a very important bank in Saudi, and they have branches across the country. Similarly, if you take example of any bank in Germany, and Al Rajhi has a tie-up with this German bank, what will happen? They have an access to lot of places in Germany. So there is no city or place in Germany which is excluded from that bank. So if my customer wants to pay to a person in a city in Germany, he can easily do through Al Rajhi. Al Rajhi will take the money in real, convert it into German currency, and send it to the place where that customer is having the account in the German bank. So this was possible through SWIFT. This was possible through SWIFT. The foreign transactions became very easy. More details, if you wish to learn more about it, you can read more and find out mainly why it was formed, when it was formed, about those things. Now individuals such as tourists and importers, exporters and MNEs conduct the transactions in foreign exchange market. So who are these retail players? Retail players mainly tourists and then students who go abroad. They actually need to convert their local currency into the foreign currency. And secondly, organizations who are importing and exporting. And import export, everybody understands. If I want to buy from other country, then I have to pay in that currency. If I sell in other country, I have to take the money in my own currency. So this requires an active foreign exchange market. So this is at the retail level that foreign exchange transaction takes place. Banks are the main players in the foreign exchange market. They are the main players. They do it at the mass level. Now let's come to the transactions. We just learnt about the spot and the forward transaction. A spot transaction is in a day-to-day basis, the transaction is completed. In a forward transaction, it is more than 2 days, it is up to 6 months, 3 months, 12 months. So point number 16 you can read here. The transaction can complete in 1, 2, 3, 6 or 12 months. Now tell me, if any transaction or in a market, if the instrument's life is less than 12 months, what is it? Is it a money market or capital market? Very good, money market. So if the life of the instruments in any market is less than 12 months, then it is money market. So here in the case of forward transactions in the foreign exchange market, the life is less than 12 months. Now there is a very special type of an instrument in foreign exchange basically, which are called hedging. Hedging, have you heard about hedging? We will take 10 more minutes and we will complete the chapter. So, pay some more attention. Anyone here who has heard about hedging? No. Hedging is a type of insurance. Now, can anyone make some guess about hedging? And obviously, when we are saying insurance, we are no. We are talking about hedging in the foreign exchange market, and I am giving you a hint that it is a type of an insurance. Now, and point is also written here, so you can read: a transaction made for the purpose of avoiding or reducing a business foreign exchange fluctuation risk. Okay, so what happens? I will explain. As we are seeing that, please write the word. Okay, I wrote it here. It's here. See, hedging. Point number 17. Let's see. Reem has answered something. Very good. Have you copied it? But still, whatever you have found. Did you understand? What did you write? Strategically using financial instruments or market strategies to offset the risk of any adverse price movements. Excellent. Very good. So, if I use her, you can read what Najla has written, and Reem also. It is against investment risk. Let us just try to summarize about hedging. Listen carefully. The foreign exchange market is one of the most volatile. You know what does volatile mean? Volatile means changing, very fast changes. Every day lot of transactions are taking place, and these transactions are resulting in a price movement of the foreign currencies. So, when it starts, foreign currencies or foreign exchange market is not 24 hours, it is also limited, and not all days, there is a off also. So, the transaction is so fast and so huge that it becomes very volatile, change in the prices, and many factors affect the price of foreign currency. Now, you know, a person who is not an investor, right, a person or a company, they are not investor, they do not want to play in this market, they just want to it is their support, you know, it is a subsidiary function. I am Toyota and I want to sell cars in Saudi. My main business is not to buy and sell currencies, my main business is to export cars to Saudi. So, you know, I do not want to get into this headache of dealing with volatility. So, many financial institutions, they came up with a type of a system called hedging. What is hedging? In hedging, you know, there is a contract, there is an agreement between one company, a financial institution, or anyone to safeguard, to fix the price of a currency. So, two companies in different countries are dealing with each other. They say, okay, you know, we are you are buying from me and you are importing from me. Now, the order is complete, we have decided on the deal. After 6 months, I will make the delivery of order. Now, after 6 months, I am dealing today. But I am you banat aktabu as-sabi link. The word you want hedging word, hedging, and the other word is volatility. So, what they do, they decide on a particular price of the currency after 6 months. Now, this is a risky proposition for whom the person who is expected to receive the payment and also the person who is going to pay, both of them are taking a chance. One will win, one will lose. Why? Because after 6 months, if suppose I want to buy 2 cars from Japan in Saudi. Now, today the suppose yen value is, suppose I have to pay 2 reals for 1 yen. After 6 months, I have to pay 3 reals. So, who is the loser? The buyer. But if I fix this price, I say no, I tell Toyota, you see, I am buying from you, but I want to go for hedging. The Toyota offers this offer of hedging, that is, I will fix the price after 6 months and you will pay the currency that we negotiate today. So, based on some negotiations, both the parties are experts, they decide that we will fix a particular rate of the currency after 6 months, after 12 months, and we will make the payment on this fixed rate. This is called hedging. This is a very common, you can read more on this. This is a very important phenomenon in the financial market. Hedging is done not just in currencies, but hedging is done in several areas, especially one example. Can you now think of any example? First of all, I am telling you that hedging is not just in Forex for currencies, it is done in several products. When 2 companies in different countries are dealing with each other, import and export are taking place, and it is a regular supply. So, it is a long term relation between the companies, between 2 countries. They try to hedge in order to safeguard the interest of and in order to make a better strategy, they try to fix the price. So, can you think of some more examples? One major example is oil. In oil, this tendency was there to hedge the prices of oil. Companies who need oil, now they do not want to be uncertain about the prices of oil. So, they want to fix certain value after 6 months, after 12 months. This is called hedging, and there may be financial institutions who can help, or the 2 countries themselves decide. More details you can read. This is a big topic. Hedging is a full topic to learn how hedging is done, what are the risks, how to manage the risks in hedging, etc. Then let us look at this point number 19. How is the price fixed? So, there is one called bidding and the other is called offer or ask. The bidding is the price for buying, for purchase, and I want to sell my foreign currency, that is called ask price. That is the price I ask for. So, every day this is the way the buying and selling of foreign currency takes place. Okay, so the trading of, I am not going through all the notes, you will do the group work and go through the entire topics. Yeah, if there is any problem you can discuss at group level with me on WhatsApp group or personally also. The market is very big, it is 4 times the global GDP. We just saw that it is not 5.3, but now as on April 2019 it was $6.6 trillion. Okay, very important point is regarding the transactions. Every day the transactions are taking place. So, it is no one's guess, I think anybody's guess in which currency the transaction is maximum. Who will guess? Every day the foreign exchange transactions that take place in all form, retail form or company form, can you guess in which currency the maximum transactions take place? Are you there? Can you guess which currency is the leading currency for trading at retail as well as institutional levels? Yeah, very good, AFAF, dollar. And 85%, in fact, there is another figure, I don't know if I saved it, I would like to show you. Yesterday, we were trying to, yes, this one. Look at this figure. I will share this with you on Blackboard. So, as on April 29, 2019, look at the top, how many? Top 35 leading currencies in which trade takes place. Now, you should understand that it is not necessary that a country in Africa and a country in Asia, two countries are dealing with each other. It is not necessary that they deal in their own currency only, they can also deal in the third currency. So, that way the number one currency in which most of the transactions take place at individual level or organizational level, it is United States dollar. It is a symbol given to all currencies, which is USD. Similarly, number 2 is euro, then yen, pound sterling, Australian dollar. Why? It is your job to answer this question also. Why these currencies are on top and some currencies are on bottom? But let us look at our currencies. The dirham is at 31.2% of transactions of foreign exchange take place in dirham, and 0.2% of transaction takes place in Saudi Riyal. So, what does that mean? That even in these countries, most of the transactions are done in the top currencies. That is why it is 0.2%, but because foreign exchange transaction is taking place. Then Malaysia, Romanian 0.1%. So, this is one source I will share with you. Okay, let us come back to the notes. How do we normally write? Yeah, I will send you. Yes, I will send you. I will post it on Blackboard. How do we exactly write, quote the price of a currency? So, this is the last part we are just discussing, then we will stop. It is normally done in two currencies. Why? Because currency rates are always fixed in relative to the other currency. So, you can see here they are done in pairs. It is called pair, currency pair. Shall I write it here? Currency pair. So, if I want to know what is the rate of euro in comparison to USD, USD JPY, GBP USD, are you all familiar with names of these currencies? I think CHF may be the, yeah, strength of it is right. Many reasons are there. You can search for it. We cannot answer right now. Search for it. What are the reasons, and then we can discuss. So, I think out of these currencies, only CHF may be. Are you aware about CHF? Which currency is this? CHF. CHF is the name of a currency. Rest of them, I think all of them are very famous currencies. Can you tell what is the name of CHF? Find out. Euro, this is euro, this is US dollar, Japanese yen, Great British pound, Australian dollar, New Zealand dollar. Yes, very good. Franc. This is francs, Swiss Re. Okay. US dollars, Canadian dollars, and CHF. All right. Let us go to the. So, most of the foreign transactions take place in the US dollar, and let us look at this. Okay, there is one important point, that what is cross rate? Cross rate is, as I told you, that there are two countries, one is Chad, the other is Mexico. There are two companies, C1 and C2, dealing in, one is importing and the other is exporting. One is in Mexico and the other is in Chad. They are dealing with each other, but these currencies are not very famous. So what they want to do, their banks ask them to convert their transaction into a third currency, suppose dollar or yen or euro. So when they do it in a third currency, the rate will be fixed, and there will be three currencies involved in this. So Chad will convert its currency into the decided currency. Mexico will also convert into this, and then they will decide about the rate. This is called cross rate, an exchange rate between two currencies computed by reference to a third currency. The third currency is what? The most popular ones. It may be US dollar, normally US dollar, or it may be Japanese yen, British pound, euro, any of the famous currencies which are most traded, so that it is easy for the bank to complete the transaction, and the countries also find it easy. This is called cross rate. And who gives these abbreviations? USD or HKD or SAR, who gives these names? These are given by a body, international body called International Standards Organization. It's a very common name, it's a very famous body. You can read more on this. Now this is your task outside the class. What is ISO? It's not just in foreign exchange, but it gives names to many other services. So what is the job of ISO? What does it do? It is also a body that gives accreditation for quality. ISO certification is there. So you can read more on it, but these are the names, standard names given by ISO, and it is approved or accepted worldwide. So USD is the name of US dollar everywhere. SAR is Saudi Riyal. AED is Emirates Dirham. So these are common and standard names given by ISO. So if a currency is written like this, Euro USD, what does it mean? It means that Euro is the base currency and USD is the quote currency. So if it is written Euro by USD is 1.281, what does it mean? It means that if I want to buy 1 euro, this is the base currency. If I want to buy 1 euro, if I want to buy 1 euro, how many dollars I need to pay? I should pay $1.2811 to buy 1 euro. So this is the rate, and this becomes base and this becomes the quote currency. This is how we read the currency rates. And if you reverse this US dollar, if you write US dollar upon euro, then what will be the rate? It will be 1 by 1.2811. So it will be divided and then calculated what is point something. So when it is point something, then this becomes the base rate and this becomes the quote. This is how the rate is quoted in the foreign currencies. It's easy, not very difficult. The only thing is when we reverse it, it becomes in, we have to just divide this one and we get the reverse value. Or in explanation it's the same. Suppose if I write euro USD is euro is 0.3, what does it mean? If I write USD and euro as 0.3, what does it mean? It means that in order to buy 1 USD, how many euro I should pay? I should pay 0.3. So this becomes the base currency and this becomes the quote currency. So this is how the quotation is done. So when you read the notes and try to understand in your group, I want you to do some group work in this. So when you start discussion among your group on all these 33 points, there are questions to be solved, This you have to do in the group assignment and submit on Blackboard. And in some days, in 2 or 3 days, I'll announce what we are going to do in the next class. But as far as the chapter is concerned, this is the last chapter. Now, if you have any question, you can ask me. Otherwise, we can stop for the day.